Crypto as an asset class is highly volatile. It's for people with a high tolerance for risk and who understand they can lose the entire value of their investment. Crypto may be more susceptible to market manipulation than securities. It's also not insured by the FDIC or protected by the Securities Investor Protection Corporation. Investors in crypto do not benefit from the same regulatory protections applicable to registered securities like stocks or bonds. Fidelity Crypto is offered by Fidelity Digital Assets. Brokerage accounts and securities trading are provided by Fidelity Brokerage Services, which does not offer crypto as a direct investment or provide trading or custody service for such assets. Throughout this interactive conversation, you'll hear us use words like cryptocurrency, Bitcoin, Ethereum, and many more. We may use terms like crypto or digital assets as substitute words for specific coins, or to talk about the ecosystem as a whole. Just remember, all coins and tokens have very different attributes and use cases, and the ones we talk about here are only part of a wide variety of digital assets in existence.
Hello, and welcome to the Covering Crypto livestream. I'm Jim Armstrong with Fidelity. It has been quite a year, as we often say, in the crypto space. We've had regulatory shifts, market volatility. The growing role of stablecoins has made headlines this year, as well as the intersection of crypto with traditional equity markets. So a lot to unpack, to say nothing of the fact that we're starting off Q4 with a government shutdown, which will be part of the conversation today as well. To talk about what's happened this year, we are thrilled to have a pair of fantastic guests on the panel today. Thank you both for making time out of your day to be with us on the live stream. It'd be great if you could just introduce yourselves real briefly, talk a little bit about what you do at Fidelity and what you'll bring to today's conversation. And Denise, we'll start with you.
Yeah, I'm happy to start. So Denise Chisholm, my title is Director of Quantitative Market Strategy, but essentially I'm in equity research. And I've been in equity research since 1999, which means that my job is to get the right stocks into our diversified funds. Okay. I just do it differently than the fundamental analysts. Instead of talking about individual securities and individual companies, I really do it all through the lens of a data-driven perspective, usually using our proprietary data sources that divide up the Russell 3000 based on sector, industry, and sub-industry. But I weave in a whole lot of macroeconomic data. And what you can see by combining a lot of the data sources is where's there's signal and where there's a lot of noise. So if you want to hear more data-driven approach as opposed to opinions, this is sort of my specialty.
Excellent. And you've got a chart or two to help explain things as well.
I do.
Awesome. Great to have you here. And Greg, how about you?
Yeah, thanks, Jim. Great to be here. I sit in Washington on Fidelity's federal government relations team. And you sort of ask yourself, why do you need a federal government relations team in Washington? I think it's worth remembering for our industry, financial services, both the legacy element of financial services and the future of what we're talking about today in crypto. So much is dictated by Washington. You know, you think of the Roth IRA. That was named after a senator from Delaware in the 70s who came up with that idea. The 401k is a IRS code. Fast forward to today when we're talking about crypto, and we'll get into the Genius Act that just was enacted into law through Washington and Congress. You know, the Bitcoin ETF, if you will, was approved by the SEC. So we stay busy keeping our eye on trends and developments within the public policy space in Washington and what that means for our clients, our customers, and of course, Fidelity itself.
Excellent. We have a lot of viewer questions that came in during registration, so we'll hit on those. But before we do that and then move to live questions, of course, I'd love it if each of you could just reflect on I guess the last 9 months of the year in total, but really dive deep on Q3, the summer months. What headlines, what events really stick out to you the most? And Greg, we'll start with you.
Well, that really is the time frame where everything shifted in, I would call it crypto public policy, right? A new administration. It's been 9 months. And you saw that, you sort of a 180 from the previous administration's approach to crypto and digital assets broadly.
Yeah.
And you really saw that in the first week of the Trump presidency with his executive order order promoting digital assets, calling the U.S. the need to be the crypto capital of the world. And if there's one word I'd sort of think about when I approach government public policy around this space is coordination, right? And so starting from that executive branch memorandum, executive order on down to the agencies in Congress, all being on one page as it relates to digital assets policy. So you've seen a ton of regulatory actions, call it rollbacks, changes that have impacted the industry there. You've seen Congress get going and enact a law, as well as pass significant market structure reforms for crypto out of the House of Representatives. And then you've just seen, again, at the regulatory level, much more of an open door to industry participants, institutional players and investors who arguably felt a little bit, I think, shut out from the previous administration in this space. So it's created a lot of comfort and confidence in crypto moving forward. And that activity in the last month has just been amazing to be a part of and watch. And, ultimately culminating in the passage of the Genius Act, the first landmark federal law for stablecoins, digital tokens pegged to the dollar.
Great. And we'll talk more about those in a minute.
Yeah.
But Denise, how about from a macroeconomic perspective? What caught your eye?
Yeah, the resilience of earnings, despite the shock that we've seen from tariffs. I mean, tariffs really, when you add it all up, weren't enough of a significant shock to the consumer to be a tipping point for either negative consumption or for corporate America. So that resilience in earnings, not only do we not see numbers come down, which was basically discounted in that almost bear market that we saw in April, but in fact, numbers are not only not going down, but actually accelerating, which is rare for this time of year. So the first thing would be definitely the resilience in earnings. But now we do have two significant tailwinds that are quite visible. The first is the legislation in the One Big Beautiful Bill Act, which drops the effective corporate tax rate via bonus depreciation and R&D expensing by almost 700 basis points. So this is a significant tailwind to corporate America. At the same time, now the Fed is recalibrating interest rates, meaning they are cutting interest rates again. When you sort of put all that together, resilience in earnings, positive tax policy, and now positive monetary policy, it's a pretty good setup for equities, historically speaking.
And with the backdrop of both the macroecon and the policy, let's move to some registration questions that came in, because there was that big price spike over the summer that caught a lot of people's attention. So when Olaf registered for the show, he said or asked, does Bitcoin dictate overall price increases? So it does feel, Bitcoin's the OG, the big coin there, but the altcoins do seem like they follow Bitcoin. Is that the case?
Yeah, let's go to the data. So, we certainly saw a catch-up trade in Ethereum, without a doubt, to Bitcoin. So when you sort of look at all the coins, you will see very tight correlations. So Bitcoin does tend to lead just a little. The one cautionary note I would add, which is to say that the correlations are very strong, so they do all move like in tandem. But there's this concept that we talk about all the time in equity investing and when we're doing historical analysis of survivor bias adjusting, meaning that you're not really thinking about all the companies, or in this case, potentially tokens, that went under. So I think that's true right now in terms of what we see. But if you look back historically, I'm sure you will see much more variability when you put all of the tokens that maybe don't make it quite so far. So yes, correlations are very high, but that doesn't always mean that you know the winners from the losers at that time.
Couple follow-up questions for you that take a more global approach looking at crypto and the equity market. So Denise has a question for it. Denise, why does crypto seem to react in the same way as the stock market on a daily basis? And then Robert asks, why does Bitcoin seem to track tech rather than any other store of value like gold?
Yeah, you're absolutely right. Nailed the correlations. When you think about what Bitcoin specifically is correlated to, it moves more with stocks than it does with commodities or even bonds or anything else. And so what you see, specifically technology stocks, Bitcoin leads technology stocks over time, just slightly by about 3 to 6 months. But you can definitely see that in the statistics. And I think it's all around the fact that at its core, Bitcoin is about an advance in technology. Right, blockchain. So that basis in some ways drives that part of the correlation. So as much as there is definitely thought around Bitcoin be a diversifying asset, so far we have not seen any of that in the data. I would say what we have seen is a very levered play on technology-laden equities.
You've read this chart that helps tell some of the story as well?
Yes, absolutely. So interestingly enough, when you think about the relationship with equities, you would think as an equity market investor that if you are seeing, a 2-year yields or the Fed cutting interest rates, if you're seeing that over time, that you would think, oh, well, because there's more monetary policy accommodation that I want to buy equities.
Sure.
But in fact, you can't prove that. The why is important in terms of why Fed is cutting, and your starting point on earnings growth is also more important. So there's not a very clinical correlation, but you do see that exact correlation in Bitcoin. So this is what has happened to 2-year yields, and they're plunging at a bottom decile rate right now. And what you can see is that very linear correlation. What you see is the more you see the decline in interest rates, the more likely Bitcoin is to advance over the next 6 months. So you're seeing a very linear correlation that you would expect to see in equities, but it's not the statistics that you see in equities, proving kind of again in a different way that Bitcoin is a more levered play on what you think the drivers of the equity market are.
Fascinating. Thank you for that. And so, Greg, in the midst of everything Denise was discussing there, we also have, as you described, kind of unprecedented levels of regulatory activity. Lots of questions from registrants and viewers about that, too. When Juan registered, he wrote in and just said, Genius Act, impact, pros, cons. And then David asks, what are the major risks which can be linked to crypto assets and more specifically those assets under the Genius Act? So before we get too deep into that, real quick, just explain Genius.
Stepping back, important to sort of understand what the Genius Act is. It is an acronym for guiding and establishing national innovation in U.S. stablecoins, and it does what it says in the name. But again, just stepping back, this is really a momentous achievement in bipartisanship in creating a law, that doesn't ride typically, as we sit here today, on government funding vehicles or reconciliation big tax packages, just as sort of a solo law dealing with an industry. In fact, a colleague was reminding me that the Committee of Jurisdiction in the Senate Banking Committee, not to get too technical here, but hasn't actually passed legislation through its body that became law since 2018. So you could have a 7-year-old in second grade. That's how long it's been since a law has been passed through that committee. So it takes a long time. This is years of policy making here that's finally been enacted in July. And really what it does for the first time is create a regulatory and legal framework coordinated at the state and federal level for stablecoin issuers and the holders of those stablecoins, right? So it creates confidence and a credible mechanism for the blockchain to integrate itself into the economic ecosphere and the legal and regulatory frameworks of this country. But importantly, it lays out provisions in the law that, provide confidence to stablecoin holders and issuers, right? So it's not only banks that can issue stablecoins, it's non-banks, it's foreign entities, it's state chartered institutions to a $10 billion cap, and then you flip over to federal above that. It requires 1-to-1 dollar-backed reserves, dollars or dollar-like instruments like short-term U.S. treasuries, and it requires them to be 1-to-1. And those stablecoin issuers have to release a public audit of those reserves every month. It also makes sure that stablecoin holders are first in line if there's any sort of insolvency crisis related to an issuer as a creditor, which is really comforting. It lays out how you can market and distribute stablecoins. You can't say they're backed by the U.S. government. You have to make very clear, right, of what you're selling. And then going on down the line and into anti-money laundering issues that the audience member asked about, it really tightens those up too around, know your customer and AML related issues. So really, a ton of confidence instilled in this space. But I would say it's worth remembering that this doesn't deal with the entire crypto ecosystem, right? This is a payment stable coin, a new asset class, if you will, that will, be available in effective law in 18 months or 120 days after they finish the regulations, which are already underway, being overseen by the U.S. Treasury Department and more specifically the Office of the Comptroller of the Currency, who will oversee this marketplace. So really an exciting time for the industry. But if we're in baseball season, maybe a single or a double, not the home run of further market structure credibility around other, algorithmic crypto digital assets like Bitcoin, Ethereum, the commodity space in Bitcoin, but and other tokens haven't been dealt with yet. But the regulators believe they have the tools where they can deal with them, and they're focused on that as well. So that's the Genius Act.
Excellent. Okay. Yeah. Now, before we move on, we do have some viewer questions that are going to help guide the rest of our conversation. So we're going to have a live poll right now. So if you're watching live on Fidelity's website, over to the right of the video player, there's a little tab. You can see where you can ask and answer questions, but there's also a polls tab there, which I'm going to navigate to myself in real time. Click on the poll and let us know which question from our viewers you would like our panel to answer next. Do you want it to be Gary's question? Will crypto fall if the NASDAQ falls? Dee's question is, how do Genius and Clarity Acts affect Fidelity specifically? And then Emma, I think I'm pronouncing that right, EMA, says, how is crypto affected by the current political and economic situation in the United States? All right, so let's see what we get here for a winner. All right, with 53%, votes are still coming in. I'll give it another second, but it looks like the very clear winner is Emma's question, which is great because it gives both of you a chance to weigh in. It really touches on both of your spheres of interest there, but 56% of the vote, so a comfortable majority, want to know how crypto is affected by the current political and economic situation in the U.S. And the elephant in this particular room is, Emma didn't know this when that question came in, but there's a government shutdown underway. So I leave it up to you to decide how you want to tackle this big question.
Yeah, I'll start.
Yeah,
I'll say less than you think in terms of politics and the economy influencing stock prices and earnings growth, which is really the key driver to both the overall equity market and what I would say from a corollary perspective, crypto. So even like when you think about government shutdowns, and Greg, you probably know the data more than I do, the 17 that we have going back, even if you aggregate them together to make them longer, what you'll see is there's very little impact on the market. If you see any impact at all, it's a little bit of multiple compression on going into the shutdown and then a little bit of multiple expansion or valuations expanding after the shutdown, but earnings are unchanged. Industrial production is unchanged. The core tenets of the economy are very much unchanged, which means ultimately at the end of the day, it's not a big signal for stock prices. And even with the economy, the underlying run rate of the economy, there's been a divergence since 2000 as margins and as more technology companies are in the S&P 500, as margins keep expanding. So in some ways, growth is fairly slow. It's only 2% GDP growth, but corporate profit margins are nearing all-time highs again. And ultimately, with some big caveats, stocks do follow earnings. And crypto, from a derivative perspective, all the data that I see is it's very much based on the drivers of stocks, which is a little bit back to that 2-year yield.
Interesting.
Yeah.
Okay. And Greg, how about from a policy perspective, impact on crypto?
We come up to these games of chicken, and we've had it, and now it's shut down.
Yeah.
So often I have to go to Denise frequently and be like, can you remind me historically of the context here, what it means for the actual marketplace? Certainly, I totally agree with Denise, and I think that can be reflected long-term in policymaking too.
Okay.
There's institutional elements here that may get delayed. When it comes to the Genius Act, they just pushed the, call it the public comment period, where they require comments in on the Genius Act and its implementation back a couple weeks to November 4th. So, an indication of them just maybe buying more time. Staff are going to be furloughed.
Yeah.
I don't think they're going to be at 100% in some of these agencies dealing with these arcane financial services laws. Regulators at the Securities and Exchange Commission likely furloughed and not moving forward on regulatory relief or sandbox innovation ideas, and not hosting regulatory roundtables with industry. So again, around the edges, does it have any sort of seismic impact on this administration's or the current public policy around crypto and the momentum therein? No, I don't think that's something we need to be concerned about.
Okay, great. Yeah. Let's train our eyes looking forward a little bit with another registration question that came in from Oswin, who asks, are there indicators or developments you're watching that give confidence in crypto's future role in mainstream finance? Denise, we know you spend every day, mostly, looking at the data. What do you see to answer that question?
That's definitely true. And in some ways, with a nascent technology, that's exactly the factor that you want to be looking at.
Yeah.
Looking at adoption rates. It's not going to be perfect, but I do think market cap is one of the things that we can look at on a daily basis. That signifies, obviously, it's got some price movement in, but institutional interest and retail interest. So the bigger market cap is, the more likely the technology core is being adopted over time. So that is one of the factors that I do watch. It's easy to find, but it's not a perfect transmission in terms of adoption.
And an interesting answer, too, because back in the day, crypto was this very non-traditional, outside of institutions type of thing. But now that's an interesting answer. Like, that's actually what you're looking at to maybe think about its future.
Right. That's right. It's the confidence in the technology that we see over time.
And another registration question, Greg, that is a nice dovetail to that one that I think fits you pretty well, comes from Robert, who asks, this is a big one, buckle.
Yeah.
Do you think digital currencies will replace fiat currencies in the future? If yes, Which countries or types of countries do you think would be the first to switch? Also, how do physical commodity assets like gold or silver figure into the crypto world? So there's a lot in there, but we get the question about crypto replacing fiat kind of a lot.
I may leave some of the commodity questions to Denise, but certainly when you look at sort of the short-term perspective, I know you sort of want to look into the future, but from a short-term perspective, short to medium term, when you just look at enacted law and where the regulators are going, particularly around the Genius Act, which is the elephant in the room today, it is very fiat-centric.
Yeah.
It is dollar-backed digital tokens or dollar-like. So a lot of policy and economic prognosticators actually believe that, the demand for dollars will increase from foreign investors and foreign holders and domestically as well. So I really don't see in that timeline any really threat to the U.S. fiat-backed system.
Okay.
I would say certainly it's no surprise probably to this audience and our team where you see foreign jurisdictions where there's more instability in their fiat that Bitcoin and other digital assets becomes this great optional store of value, right? In countries where there may be rampant inflation, government insecurity, and the like. But I think from the perspective of the U.S. system, there's some pretty strong interest in maintaining that fiat system. And Genius was an example of just how central that was to achieving such overwhelming bipartisan support and enacting it. So I don't want to leave Jim with too many follow-ups there, but I would say in the short to medium term now.
And it doesn't have to be a zero-sum game either. It's not as if crypto will take over there can be fiat and crypto existing together as they have now.
Right, exactly.
On the flip side of that is a question from a viewer named Josh who wants to know what the current roadblocks to widespread adoption of cryptocurrency as a form of payment are. So again, we can't get Satoshi on this show. Really, really hard booking. We've tried, but I think if we could, they would say, well, this didn't really all work out the way I thought it would. I pictured Bitcoin being used to pay for my dry cleaning, pick up a cup of coffee. Now it's really a store of value. And a lot of people watching will say, is that really, can crypto really go mainstream if it's not being used as a form of payment?
Yeah, I would just say the Genius Act, again, is that camel's nose under the tent there with respect to payments. But it is still a nascent situation. There are so many in the U.S. financial interfaces to make payments, and we're lucky to have a diversified sort of plumbing system for that. But certainly you have seen institutional partnerships just announced today even, and over the last 6 months, where a law really creates a lot of credibility and comfort for people to innovate. Big institutional players, new players. And so you're seeing both legacy and new finance in many ways come together or compete for what this future may hold. I mean, it is called a payment stablecoin. I don't think it's out of the realm of possibility to see yourself with a wallet paying for something like a coffee, a shirt, or anything online with your wallet of stablecoins. That is something I think that the future of finance can certainly bear out here. As
you referenced it there, like there's individual retailers that are talking about their own private stable coins, different.
That's exactly right.
Level.
We actually even in Washington had an institutional player in the marketplace test out using stable coins to buy coffee at a local coffee shop, just to educate policymakers on what it means. And I think that's what got policymakers over the hump on this was they can understand the use case of this. There's a lot of potential for reducing costs and friction in the plumbing that your average customer who goes to pay for something doesn't really see. You see the MasterCard check mark, you're out. But behind the scenes, are there ways to reduce friction and costs, business to business, business to customer? Certainly companies are looking at that. There's no question about that. And that law just breeds so much confidence in the operations and compliance of that future, which is really exciting, I think, for the asset class.
Super. There's so many ways in to talk about cryptocurrencies in general, so that transaction is certainly one of them. But Denise, people always ask us about crypto writ large as a store of value. So Tina asked when she registered, is crypto a viable choice for a diversified portfolio? So lots of people asking a version of that question. Another version of it is it too late to get started with crypto? So how do people wrap their heads around? There's the one bucket that Greg was just talking about, using it to buy and sell things, but how about holding it in your portfolio?
Yeah, absolutely. And I think it's back to that sort of quote from Peter Lynch back all those years ago, which is know what you own.
Yeah.
So again, we can debate on what Bitcoin will ultimately be in terms of a store of value, but instead of hearing me guess, let's again go back to the data and say, what are the relationships that we're seeing right now in the data? And it is very much an equity technology exposure when you look at the correlations. It's just much less correlated to any commodity, what we were talking about earlier. But what you can see in this chart is it is an equity exposure very levered. So the volatility in crypto, depending on how you measure it, this is Bitcoin, either on a daily or monthly basis, is about 10 to 20 times the S&P 500, right? So the S&P 500, the reason why you own stocks is in aggregate, they go up 8% a year. Mm-hmm. On an average basis. So that's, again, not returns that you would sort of sniff at. But to get those returns, you actually have to put up with a fair amount of volatility. On an average year, 20%, which we actually just lived through, but sometimes 50% declines. For Bitcoin, which you see has obviously dwarfed in terms of the rise, the NASDAQ and the S&P 500, the volatility is easily 20 times that, and the downdrafts are 75%. So when you think about diversification, I think about negative correlations, meaning one of your assets moves one way, the other moves the other way, therefore it cushions the returns. You're not really seeing that in Bitcoin. You're seeing a double down in terms of an equity market exposure that really has, essentially punches above its weight of 10 to 20 times the exposure. So I think you have to be careful with the word diversification. I think it's appropriate in a portfolio, understanding that it is another technology exposure that moves a whole lot more than your average technology stock.
Excellent frame. So thank you for that. That's great. Another thing to consider in the crypto space, we've got a lot of questions, as always, about security. It's a huge factor that people are obviously and rightly concerned about. So Lisa asks, Greg, this one's coming for you. So buckle up again.
Yeah.
How is crypto being legitimized given what she calls out in the open issues with corruption, digital crime, and its use in criminal activities? How will the financial sector overcome the realities of these use cases and create vehicles for investment in this new asset class? I'm so glad I hand that over to you, Greg.
No, it's an important question, really, and something the industry has struggled with. But I would say, again, going to the Genius Act, enacted law, that the highest standards have been applied to anyone who wants to issue a stablecoin in this space, coming under the umbrella of the Treasury and needing to comply with the Banking Secrecy Act. What is that? You have to deal with all the remedies that the government can provide around any sort of illicit finance activity that they will track, filing suspicious activity reports, being able to freeze wallets and freeze transactions if they see anything happen, the Office of Foreign Asset Control. And so really what I think policymakers were most concerned about was that and legitimizing any element of criminal activity. And so they made the highest standards for anyone, whether you're state, foreign, or federally regulated by the Genius Act, to apply those standards at the highest level. Look, even in conventional banking, things happen still every day in this system. It's a complicated and complex world with a lot of bad actors, but they've done everything in with respect to this stablecoin law to make it as strong as possible. So, that will be, a space for further debate too when it comes to the next legislative vehicle being the Clarity Act. It's passed out of the House of Representatives by a pretty wide bipartisan number, and what that looks like in the Senate as to those controls around other tokens and commodities in the space. So a lot of comfort in that law, hopefully, for the audience member.
And it speaks to something that we talk a lot about on the live stream, which is not all cryptocurrencies are created equal.
Right.
And if you're going to be investing or trading in this space, there's a lot of research you need to do as an individual investor to try to figure out what is a potential scam, what is potentially worth your investment. And it's not straightforward. It's a relatively new asset class, as you both have mentioned as well.
Yeah. And it's good to know the government will be, watching, right? And some serious professionals will be involved, and the filing requirements and all therein. So.
Very good. I would love it if each of you could just put on your forward-looking glasses and think a little bit about what Q4 in this year might bring. And don't be too maybe colored by what's happening literally today with the government shutdown. But in general, how do you think the year ends with respect to crypto? And Denise, we'll start with you.
Yeah, interesting. So I always look at credit spreads as the leading indicator to the equity market, which we just talked about is very related to Bitcoin.
Okay.
And it's interesting because when you look through time, the credit market is a bit the smarter market, meaning that the tighter credit spreads are, meaning the credit market saying, hey, I think that there's not a lot of insolvencies or bankruptcies coming in the future. And the more fear you see in the equity market, well, the credit market is usually more right, and the equity market can climb any wall of worry. So the big recessions that we've seen in 2009 and going back to the dot-com bubble, the credit market was the early signal in saying there is a problem here with insolvency and bankruptcies. And so we're not seeing that right now, but that is the market that I keep my eye on the most because it's a good leading indicator for both equities and Bitcoin.
Excellent. Okay. And Greg, how about from a policy regulatory perspective?
Yeah, here we are in the government shutdown. Congress is trying to deal with funding themselves and the federal government. So in fact, my focus is shifting a little bit away from the legislative body and more to the regulators and the implementation of past laws.
Yeah.
The Genius Act implementation is something we're keenly, keeping an eye on as it relates to Q4 developments. Those comments are due November 4th. There'll be a lot of activity around that. Pretty institutional stuff, but it does trickle down eventually, to the customer level for sure, and the rules of the road. Again, looking at the regulators, I don't think we're going to be seeing in Q4 probably a enacted Clarity Act. Again, that's that broader crypto market structure bill. I'm not saying never, and crazier things have happened, but just the clock in the legislative calendar as they're even trying to deal with funding, right? I have a hard time seeing that, but they're going to make earnest attempts at the staff level to continue to legislate behind the scenes, but there I go, again, going to the regulators. The Securities and Exchange Commission, the CFTC are signaling all the right moves as it relates to this space when it comes to harmonization, coordination, and using the tools at their disposal to create regulatory rules, sandboxes, and open industry dialogue to provide some further clarity in this asset class. So in many ways, I think the chair of the SEC doesn't think he needs Congress. He's got the tools, but that's sort of where my focus is going is more regulator than legislative on the crypto front.
All right. That's about all the time we have. I want to thank you both for taking time out of your afternoon to answer a lot of these questions. We really appreciate it.
Yeah, great to be here.
Great to be here.
And thank you to everybody watching as well. If you want to continue your crypto learning journey, as we call it, and we'd love for you to do that, we encourage you to register for another upcoming episode of the Covering Crypto live stream. Bookmark any of the fantastic educational resources that you see on your screen right now. Visit those URLs. You'll find on-demand episodes of our live stream there as well. Can't do too many plugs for that. And make sure you send us your questions when you're registering for our October 14th show as well. On behalf of everybody working behind the scenes to put together this live stream, thank you so much for taking time out of your day to be with us, and we hope to see you again soon.